both candidates are saying that we're going to tax the rich. But the thing is that you can only tax the rich so long. And then after you've got that piece of the pie, you have to go lower to get new revenue. And so I can see it trickling down to where it's going to affect all of us eventually.
How is the result of this election going to impact your wallet and your plan for retirement? We'll talk about that today on Financial Focus with the founder and CEO of GulfCoast Financial Services, John Kuykendall. Now, GulfCoast Financial Services has been perennially named as best of the best in financial services by the readers of the Lake City Reporter 10 straight years and running. We appreciate the accolades, John, but I think it's the perspective that you provide in planning that leads to so many continuing to vote you as best of the best. And the perspective and the insight on what goes on in politics cannot be overlooked when it comes to our financial planning, I think.
Well, it sure can't, Peter. I mean, there are a lot of things that affect us in retirement. And one of the biggest problems is trying to keep our money. We want to make sure that we have enough money for retirement, and we want to make sure that we have enough coming in every month. And so all of these things, legislative change, tax change, all these things will impact our retirement. Having done this for 32 years, almost 33 years now, plus, 20 years in banking, I've got a pretty broad background and been through quite a few elections. And even, was a banker during the 80s when we had the 22% prime. So, yeah. I was talking to somebody this morning, one of the problems that we're facing as a country is that we have to keep interest rates fairly low, because if we don't, we can't afford the houses that we're trying to sell, because it takes more income based on these houses. Now, back in the 80s, when we were doing 16.5% ARMs, 3-year ARMs, that was a lot of interest rate, but everybody could qualify because the houses were 35 to 45,000 for a 3-bedroom, 2-bath house. Now you look today where we're looking at 300,000 or 400,000, then interest rates have to stay low. But on the other hand, we're getting into a situation where, because of the debt that we have in this country and the fact that we have to sell that debt, we have to make it attractive to other people. And so therefore we have to be competitive, and interest rates somewhat have to stay up because of that. We're getting into a catch-22, Peter.
Yeah. Well, I mean, John, I don't think that anybody who had those double-digit interest rates back in the 80s would have just kept the same mortgage and kept making the payments and kept doing the same thing as interest rates continued to fall into the 90s and 2000s, right? If somebody had a 30-year mortgage, it's not like they're going to keep it when better things are available or new rates are available or a different approach is available. And yet I feel like somehow with our investment strategy, that's exactly what a lot of people have done, is sort of just set things up back in the 80s or early 90s and kept doing the same thing all the way through until today.
Well, that's it. We were taught a certain way to do things, and buy and hold, dollar cost average. We do all these things. But as we get closer to retirement, Peter, we can't afford to do the same things we've always done. We have to do things differently. We have to take advantage of the new technology and the new things that are available to us. I mean, Peter, the things that we have available now, we didn't have available in the 80s and 90s, even in 2000. They weren't available.
Such as Roths, John,
yeah,
a big one. Like you're talking about technology, but in my mind, when we're talking about interest rates and the change in the financial world, Roths come to mind as being one of the biggest new things that's available here.
Well, sure, but look at fixed index annuities. Look at fixed index life insurance, where you can get some protection on the downside, but you still get the upside. I mean, those things weren't available until recently. So there are a lot of new things out there, a lot of things that we look at. Long-term care is more of a problem now. Those are the kind of things we look at. when we're doing planning, and you can't just sit back and say, well, I've always done it this way, and I'm going to make it till I die.
Now, as we are weaving politics into this discussion, talking about this upcoming election next week, nothing is
Yeah.
over till it's over. Nothing's decided till it's decided. We don't know how things are going to turn out. But John, you've been at this for a while, more than 3 decades, and so far you have not seen an election devastate the country, or the results of an election devastate anybody financially, have you?
No, I haven't, Peter. I think what happens is that, we have to take what's given us and then adapt to what's available. And so if it's higher taxes, we adapt to that, do things that we can do to limit the taxes as best we can. We have to work around what we're given. As I've said on this show many times, things are gonna severely change in the next 10 years. We've got Social Security, we've got Medicare, they're all running out of money. We've got new tax laws in 2026 or sooner. There are a lot of things that are going to impact all of us in retirement. And so we have to be ready for that. If for a fact we get indexed income on Social Security, and the more income I have, the less I get in my Social Security check, we have to be ready for that. How am I going to make that up? There's only so much I can do to how much income I have coming in. And so, there are some things that we need to do ahead of time. And we've been working on those. Roth conversions I read this morning are up like 80%. People taking the money now, paying the taxes this year so that they don't have to pay it in the future.
So, I mean, John, over the course of your career spanning, again, more than 3 decades, have you seen that this is a trend here, that we have seen taxes come down over that time, but that right now may be a change in the direction of that trend, and therefore an advantageous time for proactive planners to look at things like Roth conversions?
Well, yeah, Peter, I think now's the active time to look at anything we can do to fix lower taxes in the future. I mean, Peter, if you look at where we are, last year we took in, what was it, like 4.4 billion trillion in income,
Tax revenue.
tax revenue.
Mhm.
That was the income that the government had to spend. And then if you look at Medicare, Social Security, and the government programs like military, that amount was 3.8 million. Now,
Trillion,
we were
trillion.
trillion. That's right.
And don't
Trillion.
forget interest on our debt, right?
Yeah, interest on our debt. So, then on top of that, the government spent 1.7 trillion more than on other programs. So we were in a deficit last year, overspending. We spent more money than we had coming in. That's only going to get worse.
Mhm.
Because we've got more people coming on Social Security. We've got more people coming on Medicare. That number is continuing to increase. We've got more social programs. And so unless we get some kind of fiscal reform, which I don't see happening because the government doesn't seem to be willing to cut back, then we're going to have to pay more money in taxes in order to cover that deficit. I mean, the government can only borrow for so long. What the president forgave $60 million in student loans the other day to workers in the government.
Yeah.
I mean, how much more can we give?
We should have more appropriate party names, right? The keep spending money party and the kick the can a little further down the road party on the other side. It doesn't seem like we've got any level heads prevailing that want to address these fiscal issues. And yet, John, they fall on the backs of you and I, our listeners, and the rest of the American public and citizens.
That's right. I mean, we are faced with higher taxes in the future. There's no doubt. I mean, right now, both candidates are saying that we're going to tax the rich. The money's going to come from the rich. But the thing is that you can only tax the rich so long. And then after you've got that piece of the pie, you have to go lower to get new revenue. And so I can see it trickling down to where it's going to affect all of us eventually, all of us that are in the middle class. And if we want to maintain the lifestyle that we have today, and we want to be able to have our money last till retirement. We have to do things differently. We have to plan differently, Peter. And that's something that I don't see a lot of people doing. I know here at Gulf Coast with our financially focused income plan, we try to do that. And so we look at taxes, Social Security, Medicare. We look at all those things. We're going to be proactive going into this. I'm not concerned about the election. I mean, whoever wins, wins. And if, one party gets control of everything, they get control of everything. My job is, how am I going to live with whatever they give me and still come out ahead?
Yep. I think that we've got to plan accordingly. Play the hand that you've been dealt is the old poker terminology, right, John?
Yeah.
Is that what we have to deal with when planning, involving and surrounding and reflecting politics in America?
Well, yeah, I mean, we have to do that. I mean, we have to we want to look further ahead and see what might happen, and then try to be proactive in taking advantage of what we have today. Because there are things that we can do today and do next year, even after the election, that will help us in the future. And I don't see Roth conversions going away anytime soon. That's certainly one way that everybody can make more in the future. The thing about it is, Peter, if I have $1 million IRA, I really don't have $1 million.
Right.
I've got like 800,000,
Only if we plan effectively.
Yeah. The rest of it belongs to the government.
Yeah.
And so, we keep forgetting that if we go into retirement with everything deferred, we have a partner, and that partner is the government. And so as they change tax laws, the amount that we owe them change. And it's not going to be in our favor. That's for sure. It's not going forward. Taxes have to go up. I mean, in order to balance or in order to meet, we're not balancing the budget, but in order to do what we need to do, the government has to quit spending or raise taxes. And the government doesn't show me that they're going to quit spending.
No, indeed. And to your point about this burden falling on the middle class, I even heard it said that you could confiscate the entire wealth of the top 1%, and it would hardly put a dent in anything as far as the spending that we do annually, the debt, the deficit. So this does fall on the middle class. That's where the bulk of the wealth for the country is. But John, there are some specific proactive planning strategies and current concerns, some proactive things like the Roth conversion, and given the set of rules that we have right now, strategies that certain individuals may want to consider implementing, especially when it comes to estate planning. I've heard that this is another big area because currently the estate tax levels and the exemptions are pretty high. An individual is like $13 million, a married couple close to $27 million, but those could come down into the future. And if you've got a sizable portfolio now and net worth, say something anywhere $3 to $5 million or more, the intent and the hope is that that is going to continue to grow over the foreseeable future. And those estate tax levels, John, they can change, and likely the discussion is will come down into the future. And so along with Roth conversions as being one specific tactic and strategy to manage that expense in that bill, I know proactive estate taxes right now are a big topic to plan around as well, correct?
Well, that's right, Peter. If we go back to the 2017 pre-Trump tax cuts, we're going to be at a 3 million plus estate tax. Anything over that. I was talking at breakfast this morning with an individual, and I said, what do you do? And he's 80 something years old. He said, well, I've got a little bit of land and I live on. I said, well, how much you got? I got 500 acres. Well, 500 acres in today's price is $2.5 million. So minimum. So he's already got an estate problem if we go back to the 2017 estate tax laws. Don't forget also that President Biden and several other candidates have talked about making us take the appreciation in our stocks and in our real estate and pay capital gains tax on that. Now, so there are other things that are coming along that may end up, we've got a couple 100,000 in a company stock, and we haven't sold it yet. We may end up having to pay the capital gains on it before we sell it, or we'll sell it because we have to, I
Yep.
mean, it's just all kinds of things happening.
Well, we can't call the results until we
No.
know that those votes are in and legit and counted and the results are in, so to speak, right? We don't know until we know. Nothing's final until it's final, it seems. Hopefully we'll hear a little less campaign commercials, get a little less junk mail in the mailbox after the election, but it seems like one cycle starts right after the one before it ends these days. But John, planning effectively, impactfully, and proactively for our financial future, regardless of the political conditions. That's what you have done for more than 30 years.
Yeah, Peter, and that's what we want to do. And we want to, even after the election, and as these things change, we know we're getting new tax laws. We know things are going to change. As we hear about them, we want to be proactive with our plans so that we can make changes and adaptation to what we're doing. Because if we don't, then we miss the boat. We have to be proactive, Peter. We can't just sit back and not be proactive. But I'm very happy to know now that I heard that both candidates for president have worked at McDonald's.
Indeed, indeed. Well, John, we'll talk to you next week where we may have a little bit more certainty on things, but who knows even by then, right?
We may have a missing Chad, So.
I remember the Chads. Yeah, absolutely. I was talking with somebody who was a little younger and wasn't aware of the hanging Chad situation, but I was telling them that it's not the first time.
No, we got all new voting machines in Florida, so it won't be us.
Yep. Regardless, though, we need to take advantage of the opportunities that we have to plan effectively, to have a plan in place. That's what you do there at GulfCoast Financial Services. You put together that financially focused written retirement income plan for proactive savers and investors to have more confidence in the financial future, regardless of what politics might bring. We can lay out the plans and then continue to adapt them as time goes on. Ladies and gentlemen, if you'd like to get that plan put together, there is no cost, no obligation for the initial phone call, a review, a planning strategy session, and to get the financially focused written retirement income plan in your hands. So give a call now, 386-755-9018, 386-755-9018, 386-755-9018, or visit online, GulfCoastFinancial.net, GulfCoastFinancial.net. John, always a pleasure. Thank you for your time and perspective here on Financial Focus.
Thank you, Peter. And no matter what happens, we're going to be all right. We just have to be proactive.
Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through GulfCoast Financial Services Inc., a registered investment advisor in Florida. GulfCoast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions. GulfCoast Financial Services, Inc. has been named as Best of the Best since 2015 in the category of Best Financial Advisor in the Lake City, Florida area. The award was based on receiving the most votes in this category from a survey offered and tabulated by the Lake City Reporter. No direct or indirect compensation was provided to the Lake City Reporter and/or any raters, and the award is not contingent on future direct or indirect compensation offered to the newspaper and/or raters. Portfolio performance is not a criterion, and voting is open to any readers of the newspaper.